Welcome back to the Futures Show with Ben Lichtenstein on the TD Ameritrade Network. With just 30 minutes left in today's show, we've got a lot to cover still. In the next half hour, we're going to take a look at the 7:30 numbers and reaction to them. We'll take a look at what got Treasuries all wound up yesterday, and should we expect more of the same today. We'll bring in the co-host of Fast Market to debate the topics on the minds of our traders and viewers at home, and we'll get set for the U.S. Equity Cash Open, which is headed our way here at a rapid rate. Now, traders, let's bring our next guest. We've got this morning joining us Alan Nuckman. He's the Chief Market Strategist at Agora Financial. Alan's here to talk PPI and durable goods orders that just came out. Alan's joining us live from the floor of the CME Group. Alan, welcome to the show. Let's get right into it. Let's talk durable goods orders. Good morning. This was a closely watched number, not only because of, well, obvious reasons. This is normally a closely watched number, but with spending coming in a little bit flat recently and all the focus on the health or wealth of the U.S. economy. Talk to us about what you saw today. It looked like it came in a little bit higher than expected, up 0.4% for durable goods orders.
Yeah, it's positive. We're expecting a negative number, so that's good to see. We've talked about this slowing growth now for many weeks, many months, and so maybe this is something positive here to build on. The market didn't react much to it. We were positive in the stock index futures coming into it, and we're essentially unchanged from those earlier levels. So it didn't give the market any boost, but it did give it a bit of support that it wasn't a big loss.
Alan, do you think this is kind of just relief, the fact that the market's just sort of a sigh of relief, sort of? I mean, the real potential, the risk, it seemed like, was to the downside here.
Yeah, exactly. And I think that's always the concern, that if you start getting a series of numbers that confirm the worries, which I personally believe are a little bit overblown as far as the growth slowing worries, that can set up some bad psychology for the markets. But we haven't seen that, and we've seen the market snap right back. If you want to get back in the macro picture, I know we're talking currencies today, but if you want to get in the macro picture, you saw the S&P come snapping back. We're right near that 2,800 level one more time. Another attack on that 2820. We had about a 100-point sell-off from those recent highs. That would send us to 2920, so we should be making new highs. I mentioned Apple as the barometer for all the commodities markets because I think it's important if we get back above to 185 in Apple, that supports all the markets, and then you could see crude breakout, you could see a lot of things happen.
Yeah, we've got multiple markets, Alan, that are poised, just holding up against some key areas of resistance. You mentioned the ES. I'm looking at the DEES highs, the October, the November highs, basically that 2,800 to 2,820 area. Now, let's talk a little bit about Brexit, though, Alan, because Theresa May appears to have exhausted every possibility. She failed miserably to provide a proposal for her colleagues that they could back. I mean, what happens next? We know we're waiting for the vote today, but ultimately, I mean, this just adds to some of the uncertainty.
Right, but let's add the but the market hasn't reacted negatively.
Yeah.
But you've seen the British pound hold. So we're around this 132.50 level, which is the top of the range, trading between 127.50 and 132.50 for many, many months, looking like it wants to test the upside. So, the actual price action has been very supportive regardless of all the nonsense that happens. So the futures markets have taught you many things over the course of last year. Number one, civics. I've learned a lot more about the process that goes on in Great Britain as far as the parliament and the civics here in the United States as well. And how that really relates to market action or not. And also physics. We've learned a lot of physics. And if you look at the currency markets have been dead in the water, trading sideways for many, many weeks, many, many months. I don't know what the catalyst is going to be, but at some point, there will be a breakout.
Yeah, we're looking at a British pound chart here right now, and it certainly has been sideways, Alan, albeit within a 1,000 ticks of sideways range, but certainly a similar situation playing out in the dollar and multiple currencies, as you mentioned. Now, I'm wondering if you're surprised at all, Alan, by the lack of volatility, or if this is what you thought we'd see.
Yeah, that's what's really the most interesting thing, is it's not just the pound. I mean, the pound is maybe a binary event that could have a major impact, but if you look at the euro currency has been going absolutely nowhere fast. We've seen the dollar index kind of topping out at this 97 level. Just when we think it's going to break, it doesn't, and rallies back, and just the path of least resistance has been higher. So physics as far as trading sideways in some of these currencies, and also the physics of the overall trends that we've seen in crude oil continues to move higher and higher and higher. You continue to see the stock market continue to move on that path of that momentum, and I'm not the guy that's going to try and pick a shift in that momentum. So I've got to have confidence the overall trends holding and doing what they're doing.
Hey, Alan, I'm glad you brought the euro currency into the discussion because they came under pressure last week. They actually posted into a new low for the year, taking out last year's low as well in reaction to Draghi's comments, much more dovish than we had been expecting. He had to revise growth and inflation expectations lower. Where does this leave them at this point? I mean, we've got to see something encouraging or something positive in terms of economic data in the near future. Otherwise, ultimately, we could see some further price decay at this point.
Yeah, it made new lows, but again, begrudgingly. I mean, it's not slamming lower at all. The volatility is extremely, extremely low. If you remember years ago, we were all in a contest to, see who could have the lowest rates around the world, and it was a rate dive. Now we're essentially having a contest to say who's not going to raise rates ever again. Yeah. America was, pretty much the first to say that rates aren't going up in 2019, and then they came out and said the same thing. So the question is, how is that going to impact the currencies? Somebody's going to have to move. It's a chess game at some point. But that's where we just have to focus on the price action and use that as the best indicator right now. But I still remain more bearish on the dollar and more bullish on the euro currency. If you look at the overall picture, I mean, I think that's the best risk-reward situation as it stands right now. How much more downside is there in the euro currency? I don't think it's worth it to be digging deep down here at these levels.
All right, well, we'll keep an eye on it, Alan, especially if the economic data continues to come in soft. There's a lot going on here in the currencies and the financial markets in general. Alan, that's why we asked you to join us here this morning to help straighten out some of the question marks, as I like to say. Traders, that's Alan Nuckman joining us from Agora Financial, live from the floor of the CME Group. Now, I want to take a minute here. I want to shift